Yes, it's true. It seems like it doesn't really matter what kind of altcoin we pick here because there's so much correlation, right? When Bitcoin goes up, especially when Ethereum goes up, then most altcoins go up as well. And yes, Chainlink is partially driven by the overall macro, but there's also something idiosyncratically going on for Chainlink. In other words, some positive news that drive the Chainlink rally that might help the token outperform the rest of the market going forward as well. Now, this is what I mean. This is Chainlink relative to other altcoins, so relative to the others market cap. It's a chart of roughly 2 years. And we have seen quite a bit of outperformance. So that's now not in US dollars. This is how much better Chainlink did relative to the rest of the market. But just from a TA perspective, just from looking at the trading range, there might be another 30% going forward. The news is, of course, the Chainlink ETF launched by Grayscale. So Grayscale is converting its Chainlink Trust into an ETF. And that potentially will attract some more capital from traditional finance. So that's currently the reason why Chainlink did so well. Now there's another interesting approach to see how well Chainlink is doing relative to the rest. We can just look at the others market cap, but we can also look at a measure called Chainlink dominance. You might have heard of Bitcoin dominance. Bitcoin dominance measures how much of all of crypto in terms of market cap is currently in Bitcoin. We can use the same approach for other assets. We can do that for Ethereum. We can also do that for Chainlink. This is the long-term Chainlink dominance chart. Chainlink outperformed the rest of the market for quite a while, even during the ICO bubble burst. Right? In 2018, we actually had a bear market, but Chainlink was still able to outperform. That outperformance was more than 10,000%. We peaked in August of 2020, but for the last 3 years, we tend to be in a sideways trading range with the rest of the market. This is the ETF rally, and really it gives a good impression how much potential upside there is versus Bitcoin, Ethereum, and all the others. In the best case, more than 130%. So we might just see yet another turnaround, as we've seen several times in the past at similar price levels. And it's always about risk versus reward. Nobody knows if you're going down again by those 17 or 18%. But when the risk is that compared to the potential reward, maybe that's a risk worth taking. The problem, of course, with many altcoins is tokenomics, as in the supply tends to grow relatively quickly. It tends to grow faster than the supply of Bitcoin or supply of Ethereum or even the supply of many fiat currencies. So because supply in altcoins grows quickly, we need to see adoption grow very quickly as well. The issue with Chainlink is that the supply expansion is not predefined. As in, the team at any point in time can decide we are going to sell more Chainlink, we are going to issue more Chainlink to potentially fund operations, to potentially fund new development. The maximum amount of Link tokens that can ever float is 1 billion. And we are currently at 588 million. So a growth of a bit over 50% from here at some point. But of course the question is, when is the team really going to cash out more? Maybe there won't be that much selling at the current prices, but that's probably the reason why we tend to see those turnarounds every now and then. Whenever Chainlink, comparatively speaking, is expensive, potentially because the Link team has announced a new feature, has announced a new project, and excitement grows again, then it might make sense to take some chips off the table. At least that's probably happening. And that's the fundamental reason why we are still in the sideways trading range for so many years. I'm not arguing that we have to go out of this trading range. That's very unclear. But it does seem like, relatively speaking, Chainlink is rather cheap. Now, I'm not making any statement here regarding the US dollar price, but I'm just looking at opportunity cost. How is Chainlink doing relative to the rest of the altcoin market? If now Bitcoin and Ethereum is going to crash from here, then of course many altcoins will go down with it. Maybe Chainlink might lose less, but still overall the macro environment has an impact. There are ways to mitigate the macro environment. That's called delta neutralization. So we'd go long Chainlink and then short something else in the market. So short Ethereum, short Bitcoin, or short an altcoin that we don't really like. So we bet on rising and on falling prices at the same time. We're just playing the spread of the two assets. But that's a bit more of an advanced concept. If you're interested in that, then feel free to check out the premium membership, right? thebitcointrade.com. This is where we do a lot of delta neutral trades. The way to plot this on a chart is to enter something like link price / and then something that we are not bullish on. Let's say that's a competitor PIF on the Solana chain. So you go link USDT/PIF USDT. And that would be a potential trade that we might be taking in premium. Right? We have long-term outperformance that's relatively independent of the general macro. You can even compare this with the general chart. So what you're doing is you click on this plus over here. This is tradingview.com, by the way. You enter maybe Bitcoin USDT, and then you plot this in a new pane. Then it will be shown here at the bottom. We add the logarithmic chart. We can see those things side by side. And we can clearly see, even when Bitcoin falls by, say, 30%, this bet does not necessarily fall, right? It even appreciated by 50%. So we reduce the volatility in our portfolio by doing things that are delta neutral, by doing things that are not so much impacted by the general ups and downs of the market, right? When Bitcoin is going down by 30%, this relative valuation rather went up. And that's a mistake that I see most people do in crypto. Most people take it too simply, right? Most people just get exposure to the general market, hope that prices go up, hope that they pick the right altcoin. And while this individual altcoin might have been a good choice, it outperformed, the position still might not have made any money because, again, the macro itself matters as well. And that's the problem, right? We want to be hedged against the general macro. We want to make money investing without being exposed to the massive ups and downs of the market. I've seen so many people, even within the premium membership, that said, I made so much money, I became a millionaire, and then I lost 50, 60, 70% of my money. What should I do now? How do I get my money quickly back? The honest answer is it's very hard to get that money back quickly, right? It's very hard once you're down 60 or 70% to double and triple the capital that quickly again. Better just to restart. It's better just to allocate towards that portfolio again, maybe save some money again, and then be okay with a slower growth rate. We don't have to double and triple our capital within a few months. We just have to grow our capital consistently. And in order to achieve this, we have to reduce the volatility. We have to make bets that are not dependent on the general market. And that's why I like positions like this, delta neutral positions. Chainlink is doing much better than PIF. That's also because of tokenomics, right? I don't know discuss PIF in this video, but just have a look at this as well, right? Look at tokenomist.ai, search for PIF and have a look at how that supply expands over time. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. Let's get back to Chainlink. So we've got 814,000 holders on the Ethereum chain. And let's look at those holders in a bit more detail. On the left side, we see the number of wallets with at least 0.1 link tokens. Now, if you just make that cutoff, 0.1 tokens, which is $1.50 or so, right? We're already getting down from the number of holders from 814 to just 611,000. In other words, 200,000 wallets just own a little bit of dust, right? They don't really own any real Chainlink. Once we make a more significant cutoff, 66 link tokens, now that's roughly $1,000 worth of link, we can see how the recent increase in the number of holders didn't really happen for that cohort, right? It was only a few small wallets that increased in number. But once we have this $1,000 threshold, the growth has pretty much stopped at the end of 2022. That was, by the way, here on the chart. So it seems like the team has cashed out quite a bit. Chainlink underperformed the rest of the market by 75%. But once the retail investor wasn't that keen anymore on buying Link, that's also when the sell pressure by the team has slowed down. That's when Chainlink started to trade with the general market more. On the right side, we see the number of wallets with at least 660 Link tokens. That's now $10,000 worth of Link. Here the peak is at the end of 2023. So that's over here on this chart. Let's go up a few more orders of magnitude. This is now $100,000. This is now 1 million. This is now 10 million. What I find interesting about those charts is that the bigger wallets, they tend to increase in numbers. Now, why are they increasing? Is it because they're buying the Link tokens or because they get some allocation through those unlocks? I don't know. But there's definitely a disconnect happening between the whales and between the retail investors. The retail investors have given up and the whales are still long-term at least accumulating. It's also always important to look at what's happening with the leverage in the market, right? As in how much short-term capital is in an asset. There are the perpetual futures, that is levered bets on a price. It's a derivatives market that's on centralized exchanges and decentralized exchanges, and it allows to bet on an asset with leverage using financing costs, but also using less trading fees. So if you want to get in and out of an asset very quickly, we rather use the perpetual futures market than the spot market. When there's a lot of bets on a price, that means there's short-term leverage in that asset. If there's little bets on a price, so very little open interest, that means that the asset is not that levered, that it's potentially a good time to buy. But one step at a time, have a look at this. This is the 10th of October, where funding rates went massively negative. And that is because there was a lot of long liquidations. So people that were betting on rising prices of Chainlink, they all got liquidated. And that's because Chainlink, within a few hours, fell by 65% to then subsequently recover. This is a structure we see for many altcoins. We don't just see that for Chainlink, we see this for many alts. Many alts saw a massive liquidity crunch with a subsequent recovery. Now Chainlink fell more, so by those 64-65% compared to the average altcoin. The average altcoin only fell by 47%. So we did have more liquidations for Chainlink compared to other alts. Since that liquidation event, many altcoins tend to rather go down. So all the longs got liquidated, but it seems like the short-term traders that lost everything on that day, they are now also slowly unwinding their spot positions. So we are currently rather on the higher end of that trading range, which of course isn't that great, right? At least in the short term. The open interest, so the amounts of bets on the Chainlink price on the 10th of October went from 1.4 billion down to 600 million. So that's 800 million worth of bets completely disappearing from the market. And so since that liquidation event, we haven't really seen the open interest recover. We are just at the same level. In other words, there's very little leverage in the Chainlink price right now. So the open interest that's still left after that crash, that's mainly people that tend to bet on falling prices, right? It was the longs that got liquidated because we had the quick crash to the downside. The people that bet on falling prices on that day, they made money. They are still around. They are okay. Now that in turn means that the market makers have a bit of an incentive to push up the prices now, right? They've got an incentive to liquidate the shorts, to potentially initiate a short squeeze. So this is what might have happened. The professional investors, they might have been able to buy the bottom, right, during that flash crash. They are long, they're buying the bottom, then the price recovers. And now that there's the short investors left, they might want to push up the price even further to then liquidate those shorts. Will this happen? I don't know. But there is this long-term interesting effect of correlation between the bets on the price, right, the open interest, and the spot price itself. That's what we see in yellow. So whenever there's more bets on a price, the spot price tends to be high. Whenever there's less bets on the price, the spot price tends to be low. And currently we are comparatively low. Again, because of the 10th of October. And so yes, I do believe there's a good chance that Chainlink will outperform the rest of the market by 30%, potentially even more. The news are very, very positive. The leverage on the asset is very, very low. The whales seem to long-term accumulate. And while it's very unclear what the general market is doing, I'm a fan of using just relative valuation bets, right? We go long the thing that we are bullish on, but at the same time, we try to find an asset that we do not like and we go short that asset. And then we balance this out with proper risk management. We set our stop losses right. We set our position sizes right. And if we do that, we've got a portfolio that tends to outperform long-term, irrespective of what the general market is doing. I'm not just talking theory here, right? We opened a capital trading pool for all the annual members of the premium membership here. And while Bitcoin went down 22% since we opened that trading pool, so that was in July of this year, our trading pool made quite nice profit. And so that's the delta we want to see, right? 5 to 10% every month on average over just buying and holding Bitcoin, irrespective of what Bitcoin is doing. We want to make money when we're going sideways, but we still want to keep our money even if the market crashes. And here, by the way, this was the 10th of October. So we made money during that flash crash while most others lost. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. Helps the channel grow. Feel free to also check out the premium membership. This is where I explain what kind of trades I do, how I do them, how I manage my risk, and you can simply just copy trade me. Or if you want to do this automatically, if you want to be part of the next copy trading vault, that will launch in January of next year to all the annual subscribers. But you can start off with just monthly subscribing, see if the strategy works for you. And if it does, then you can still change this over to yearly afterwards. Hope you got some value out of this video and see you next time. Cheers.